Welcome to Getting Rich with Rich. I'm Rich, founder of Under the Radar Report. It's great to be back. Nothing has changed from last week. Our team has been head down analyzing stocks. This week's issue, we look in depth at 12 of them, and I want to go through 4. 3 of which are software related. Marketplace for Jobs, Airtasker, Energy Trader, Energy One, EOL, eHealth Group, MetAdvisor, MDR. Regular watchers will know I own Airtasker and MetAdvisor, and on that note, I want to talk quickly about managing your portfolio. The 3 stocks I mentioned above all tick the boxes in terms of what we look for, but you can't always get. They're secular growth stories, trading at value prices. It's kind of getting in early in Apple or Nvidia. These are fantastic investments when you can get them at the right price. It doesn't happen that often, but you've got to be in it to win it. If you pay too much, you can easily get hit if there are bumps in the road. But you've got to have some of these stocks in your portfolio if you really want to make a difference, if you want to turn that needle. The key to managing a portfolio is that these are just one of the types of stocks you should own. So running a portfolio is about looking for stocks with different attributes. Basically, these ones obviously have big growth potential and they might become part of your core portfolio, but there's a lot of boxes they have to tick. There's a lot of hurdles they have to clear. Other times you're looking to add stocks that have consistency of earnings and, yes, dividends. So in small caps, you can actually get this. One of our best buys for the past 6 months has been New Zealand Media, or NZM. This company's dominant in its market and it's started performing because the New Zealand economy is starting to improve and these guys are among the early beneficiaries. But even when it wasn't performing that well, it was paying good dividends. So there's a base. And this stock is a good small cap to balance out your portfolio, which is why, it's also at the quality end. So whereas, New Zealand Media is cyclical, the others that I've mentioned above, the 3 software companies, they're surfing secular trends. Like Airtasker, you've probably heard of. In fact, I'm using a Tasker this weekend to build my ping pong table. So the point is that the business has achieved the network effect in Australia. Basically, they're matching up people like me who want stuff done with people who can do stuff. And, it's just a click of an app. So it's really easy. The company is looking to replicate this strategy in the UK and the US. It's using its technology platform. So you're benefiting from, sunk costs. You're benefiting from, a business model that's been proven and is just going to go further and further, hopefully. So you might not have heard of Energy One or MetAdvisor because these are B2B businesses. But all these businesses, they're building software platforms as well. They've built software platforms. And that's a relatively fixed cost base. So this is where you get your super returns. But they're not even, they're lumpy. Like Airtasker's lost $42 million in the past 4 years, for example, but was actually cash flow positive in FY24, which was a big deal. So what these companies have done, as I've said, is prove up their business model. So they've reduced the risk. And they're investing that money into other markets. Like Energy One, it grew its revenues 17% or something like that, but its operating earnings were flat. That's because it reinvested into growth markets. So you've got that potential there and you limiting your financial risk because they're not losing money hand over foot, but there is more potential than New Zealand Media, but you need New Zealand Media to balance out your risk. So what's coming up? We're going through all 100 plus small caps next week, and we've added 3 stocks to our best buys. You've got to check it out, and it's great to be with you again. Looking forward to next issue of Get Rich with Rich.